Welcome to our second in the series of the R&D Tax Relief for the creative industries. So I hope you find it really useful, and we do have the recording of the first one going up on the website, so you'll be able to access that should you need that. So I'd really like to welcome Michaela and Suzanne from Ad Valorem, who are our financial experts. So they're the ones who are not flummoxed by all of the tax credit language and constraints. So yeah, I'll hand over to you, Michaela.
Yeah, hi guys. So my name is Michaela. If we just move on to the slide presentation, you'll see a little bit about Ad Valorem, as we're an accounts practice which is regulated, and alongside our armory of accounts, compliance, audit, specialist tax, we have the R&D team. So we've been established for over 25 years as a business. My role is externally working with business owners, independents, partners, sisters, accountants, and anyone else in between that might need our support in areas that they don't know, don't understand, but might be worth adding to their business. Today, we're going to be discussing in more detail about R&D tax credits, which is certainly a lucrative opportunity for people in the creative industries to claim a tax benefit. You'll be talked through in detail by my esteemed colleague, Suzanne Clements, who's head of R&D. I'll hand over now.
Hello everyone, thanks for coming along today. My name's Suzanne Clements. I'm Head of R&D at Ad Valorem Lumina. My team specialises in R&D tax credits within the broader accountancy practice. So I'm a former HMRC inspector. Some of you may have seen me in webinar 1. I spent many years working on a specialist unit for R&D tax credits. An essential part of my role at Ad Valorem is to ensure that R&D claims are compiled and evidenced in a robust, compliant manner to satisfy HMRC's demanding requirements in this area. So as such, I carry out quality assurance on all of our claims in tandem with our QA and technical policy manager, Lisa Waller. Lisa is a fully trained accountant who has considerable R&D expertise, and you'll be meeting her in the next webinar in the series. So we'll run through the first section of today's presentation and then stop at around the halfway point for any questions. And we'll then have another question session at the end. However, there will be some slides where we'll ask to take a bit of a temperature check by asking you to give us a thumbs up in response to some questions. So please just do that as we go along. But let's move on to slide 5, please, Abby. So what is R&D tax relief? So the UK R&D tax incentives are there to promote innovation within the UK economy. They're fundamentally part of a policy mechanism which is meant to encourage companies to invest in scientific and technological advancement. Investment means growth, job creation, and promoting the UK as a centre for expertise and innovation. So where companies are investing money into creating new products or improving the way something is done, they should take advantage of the R&D scheme's benefits. This applies to all industries where technology plays a role and people are meeting technological challenges by trying to make changes, and that of course includes the creative industries too. The R&D schemes can have a significant impact on a company's tax position. They can reduce your corporation tax payable and in some cases can produce an actual credit payment. So it is important that this is built into your thinking about how to support your projects financially. Creative industries do perform R&D, but they tend not to have a specific budget for R&D or have R&D tax credits on their radar. And even where you have creative businesses that are highly active in R&D, sometimes those activities aren't recognised as such by the people undertaking them. So we're looking for projects that are seeking an advance in science or technology, and this can often be the case in creative industries projects. Were you making technological changes to come up with a process, a product, or a service that goes beyond or improves what was there before, that extends capability? It may be worth exploring how the reliefs can support your project. Slide 6, please. So, recent reforms. In the early days of the R&D schemes, a claim could be simply figures on a CT 600 tax return, with no supporting information whatsoever. At Ad Valorem, we initiated our R&D offering 13 years ago. However, the landscape has changed enormously in that time. Events of the last few years have converged to make R&D tax credits a challenging area of UK tax in which to specialise. And these challenges include a continually shifting field as the scheme's rates and criteria have been altered by successive governments, culminating in the move to the new merged RDEX scheme and ERIS. There's also been more stringent and time-sensitive reporting requirements introduced, and new measures intended to deter fraud and error, which means that claims require much stronger evidence and substantiation. So today, claims often involve a combination of technical interpretation, financial analysis, and regulatory considerations. Changes in the legislation, rates, reporting requirements, qualifying criteria, these all need to be considered. And at the same time, HMRC's expectations around claim quality have become more detailed, with greater evidence on that supporting evidence. So how do we approach these requirements? At Ad Valorem, we have a team with individuals who have both HMRC and accountancy tax professionalism, entrepreneurial experience, and strong technological expertise to inform our advisory work. When you make a claim for R&D tax credits, we evidence that in 2 separate reports. The technical narrative explains the project and demonstrates that it was seeking an advance as defined in the guidelines produced by the Department for Science, Innovation and Technology. This is the statute that defines R&D for tax purposes, so it's not enough just to explain the work. The way we put that together shows that the project is hitting those relevant criteria. And putting that together, it's an interactive process based on speaking with people at the project's coalface, so to speak. The second report we supply details the qualifying expenditure for that accounting period, and it shows how that's been arrived at and how it flows into the tax calculation. So we build up a picture of those costs to sit alongside the explanation of the project work, and we carry out a detailed due diligence process to make sure that everything that goes into the claim is transparent and fully defensible in terms of the legislation. Slide 7, please. So I won't go through all of these, just cover a few of the main issues on the legislative or financial compilation side. The first being the Additional Information Form, or AIF. This is a compulsory HMRC form which must be submitted online prior to filing the claim. It contains specific questions and it requires certain information such as the company's UTR, pay-as-you-earn reference, VAT, etc., the senior officer's name and contact details, an expenditure breakdown, which has to be analysed by cost category and show qualifying direct activities and indirect activities. The expenditure also has to be shown per project, and we also give the project detail, number of projects being claimed for, descriptions of the activities undertaken, and this follows our technical narrative, which we supply in addition to the AIF. HMRC brought this in because some claimants weren't submitting any information with their claims. Obviously at Ad Valorem we've always provided that extra information, but now HMRC are requiring it from everyone. Another issue is pre-notification. So this applies to accounting periods starting on or after the 1st of April 2023. HMRC requires companies in some cases to give advance warning that they intend to make an R&D claim. And this has to be done if a company is claiming for the first time, or if its last claim was made more than 3 years before the last date of the claim notification period. The claim notification period runs from the first day of the period of account and it ends 6 months after the end of the period of account. If you do need to pre-notify and you miss that pre-notification window, then unfortunately it won't be possible to make a claim for that period. This requirement has caused quite a lot of disruption. It's disqualified many genuine claims, unfortunately. And for new clients coming to us, it frequently means that when they first approach us for support, their first period of qualifying expenditure on R&D is already no longer eligible. So companies have to be aware of the R&D schemes and be prepared to explore them within 6 months of the end of their period of account. So I'll just talk about ERIS here. For accounting periods starting on or after the 1st of April 2024, the legacy SME and RDEX schemes no longer apply, and the merged RDEX scheme is introduced, which applies to most claimant companies. And this is a big change in the R&D legislation. It's meant to simplify the R&D tax framework by bringing existing reliefs together. However, ERIS is there because the concept of an SME still exists for R&D, and this ERIS scheme, Enhanced R&D Intensive Support, runs alongside the merged scheme, and it's a more generous relief, more in line with the former SME scheme. However, the circumstances in which you can claim ERIS are stricter, and they're subject to new criteria, R&D intensity being the main one. So your company has to be loss-making, and your R&D expenditure has to be at least 30% of your total expenditure for the year. So those thresholds apply to the company results amalgamated with any connected companies. So if they're controlled by the same person or group of people, we need to look wider than the company itself to check that eligibility. HMRC does look more closely at ERIS claims just because they're more generous, so we do have to make sure we get those right. I'll also mention the pay-as-you-earn cap. For both merged and ERIS schemes, there is a cap which may limit the credit that you can get back in your hand if you have low or no payroll. So it's just worth thinking about the staff that you have where pay-as-you-earn is being operated. I'll also mention the SIC code, which you would report on Companies House. This can be flagged by HMRC as a potential risk if your SIC code perhaps reflects business activity which HMRC thinks is unlikely to involve a company in R&D. For example, things like retail sales. It's worth considering whether you've got a historical SIC code on there, which no longer reflects what the company's actually doing, and updating it if necessary, or adding to it. You can have more than one code. Slide 8, please. So some areas of recent scrutiny and HMRC focus. One of these is upstream and downstream contractual requirements, and this has been an area of a lot of controversy and changes in view from HMRC over a number of years. Anyone within the R&D advisory industry understands this very well. It's been quite difficult to navigate. Basically, expenditure incurred by a company in carrying out R&D activities that have been contracted to it by another person is generally not going to be qualifying under the legacy SME or the new schemes. And this is intended to prevent both parties to a contract from claiming relief for the same activities, so double claims. So careful review of contracts is needed to determine whether R&D activity has been subcontracted, as the guidance and the legislation do differ for the legacy SME scheme and the new merged and ERIS schemes. Under the merged and ERIS schemes, the general rule is that only the party who takes the decision to undertake or initiate R&D will be able to claim. The primary test is whether the principle to a contract intended or contemplated that R&D would be carried out. So you need to consider not only the arrangements with your customer for what you're doing, but also your arrangements with any contractors you might be paying for your R&D. Slide 9, please. I'm just going to run through another area of recent scrutiny from HMRC. This relates to overseas restrictions. So again, for accounting periods beginning on or after the 1st of April 2024, R&D activity will basically have to be physically located in the UK for the costs to be included in R&D relief claims. So any UK companies who are currently claiming R&D costs paid to overseas companies or third parties, whether within your group or not, may no longer be able to include those costs in their claims. If we're talking about subcontractors that you're using, what matters is that they have to be undertaking the actual R&D activity in the UK. If they're externally provided workers, labour provided by a staff agency, for instance, those costs are going to be limited to situations where the workers are paid a salary under the UK pay-as-you-earn NIC scheme. There are some exemptions to this where work outside the UK is permitted, but these relate to very specific scenarios where the R&D has to be carried out in that place overseas for geographical reasons, legal reasons, environmental reasons, for instance. So I've talked about some of the the more sort of legislative and financial aspects of HMRC compliance issues. So I'd like to move on now to talking about the risks and potential pitfalls when we're thinking about the actual technical narrative explaining the R&D projects. So when putting that narrative together, it's really vital to be fully aware of the DCIT guidelines. As I mentioned before, this is the statute that defines R&D for tax purposes. It's quite a detailed document. It doesn't officially belong to HMRC. It's published by the Department for Science, Innovation and Technology, but HMRC has to use that for the definition of R&D. So it's quite detailed, but it hasn't changed substantially in more than 20 years. There are various tax technical definitions there, and the narrative that you provide to explain your project has to reference those. For example, you need to understand the concept of an advance and of scientific or technological uncertainty, among other things, but those are very important. So we have to explain the advance in terms of its context in relation to existing knowledge and capability. So if, for instance, your project was intending to develop something new knowledge, new capability in a particular area of science or technology, then we need to describe what was already known, what the industry was already capable of. If the intention was to improve an existing product or device or a service or a process, we need to explain that the existing features and capabilities of whatever was there before. So once we understand the context that the project arose in, we'll be able to judge if an advance was being sought relative to that existing state of the art. So we're asking, what are the current benchmark technologies or methods used to do this? What will this project change? So bearing in mind, a project has a definition too. It is a number of activities conducted to a method or plan in order to achieve an advance in science or technology. So we need to get those project boundaries right. We're trying to identify all the activities that were done which collectively serve to address that uncertainty associated with achieving the advance. So we look to see when the uncertainty was first identified and when it was resolved, or when the company gave up trying, because failed projects can also qualify. And we need to be aware of the concept of a competent professional. This is not a defined term in the DCIT guidelines, but it basically means someone with the experience, possibly qualifications, who understands the current state of the technology that you're working with. And that person can't come up with a solution relatively easily just by using their expertise and information that's publicly available. So if that's the case, then you've got an expert. They have, they understand this technology, they know what it can and can't do, and you're trying to make it do something else. And they're saying, well, I can't just sit down and figure out how to do that because I'm an expert. We'll have to go through a process of trial and error. We'll have to experiment, test things, find out from the process how to do this thing that we're trying to achieve. If that's the case, then it's it's possible that your project qualifies. So we would explain the trajectory of that work, and any failures along the way are worth mentioning because that just highlights how uncertain the process was. So we make your claim in your CT 600 tax return for your company. So for each period that you claim, we have to show how that project has moved on or come to an end. So there has to be that continuing uncertainty to continue to claim. Projects can span multiple accounting periods. Some projects take many years to achieve their goals. But as long as you are still trying to resolve that, it's probably going to be technological uncertainty rather than pure scientific uncertainty, then your project can still be claimed for. Slide 12, please. So this is just talking about facts, figures, evidence. Basically, the days are gone when an R&D claim was just figures on a CT 600. HMRC expects to see the facts and the forensics behind that. So just to consider, if you're putting time into grant applications, for instance, then do consider putting time into an R&D claim as well. It is a process, there is some time investment, but it could be well worth it for you. At the end of the day, asking the government to give you money, it means putting a claim together that withstands their scrutiny. But this shouldn't discourage you from claiming the legitimate reliefs that you're entitled to. The government wants to encourage innovation and investment in the UK. But if you're busy running your business and hopefully carrying out R&D projects, you don't have the time to become a subject matter expert in R&D tax credits. As you've seen, it's complex. There are a lot of moving parts, and working with a reputable advisor who understands both the technical and the compliance aspects of the process takes away the burden of that. Slide 13, please. So why effective R&D support matters. There are, as we've said, many moving parts to consider when compiling an R&D claim. A company may be moving from a legacy scheme to one of the new schemes, which means looking anew at qualifying criteria and cost categories. We need to consider not only the usual statutory filing deadlines, but the new deadlines imposed by HMRC, such as pre-notification. We need to be aware of how HMRC is currently approaching complex areas, and we make clients aware of any risks. Some clients come to us who have prepared their own claims in the past. We carry out a review and highlight those areas where HMRC might perceive a risk, and very often it's a matter of pure luck that HMRC hasn't opened an inquiry. Basically, it's far better to have the scrutiny from a trusted advisor than having it from HMRC, because an inquiry is a strenuous and long-winded process for a company, even just to compile the information that HMRC asks for. It takes a lot of business critical hours, and it causes uncertainty and stress. So above all, with our clients, we engage in the interactive process to elicit the financial and technical information that goes into evidencing a claim. Slide 14, please. So here just trying to pinpoint a few things that businesses should look for in an R&D provider. The first being technical understanding. One of the most important aspects of the R&D claim is obviously identifying where that genuine technological uncertainty exists. And that takes more than simply understanding the legislation. It also means appreciating how innovation actually happens in practice in different industries. So a strong advisor should be able to engage credibly with your engineers, your developers, your technical teams, and understand those technical challenges that were being addressed and why the solution was not obvious, what experimentation took place, and that the trajectory of that work across different periods. They should also be aware of the current R&D landscape. There have been such a raft of reforms in R&D in recent years that any non-specialist would really struggle to keep abreast of these. And for businesses, this means it's really valuable to work in real time with advisors who are close to the current legislation, HMRC guidance, and their evolving interpretation of the rules. So they should be able to help a business navigate those areas really clearly, pragmatically, not overcomplicate the process, but make sure clients are aware of the pinch points. We're a member of HMRC's R&D Communication Forum. We attend meetings with HMRC to get those insights and updates directly from HMRC. And it's also important to have a finger on any tribunal cases concerning R&D that might give some guidance about how HMRC are currently approaching something. A good advisor should have really robust quality and compliance processes. So because expectations around claim quality have increased, those strong internal processes are really important. So a well-prepared claim needs a clear technical narrative, logical, proportionate costing methodology, and show a consistent link between the qualifying activity and the expenditure that's being claimed, with the appropriate supporting evidence, and there should be some transparent justification of the costs that have gone into the claim. So businesses should really feel quite confident if you're approaching a new advisor to ask questions like, how are your claims reviewed internally? What does your quality assurance process look like? Who actually oversees the technical and financial quality of the claim? And, how are you making sure that you're aligned with current HMRC expectations? At Lumina, every claim goes through a detailed QA process because we want to make sure that claims are accurate, robust, defensible. We want to answer any questions that might occur to HMRC before they get the chance to ask them. So a good advisor should also be able to tell you about their experience supporting any HMRC enquiries. And most claims progress without any issue, but HMRC enquiries are still a part of the compliance environment. An inquiry doesn't necessarily mean that there's anything wrong with a claim. It may just be that HMRC are asking for clarification or more information. But what makes the difference in an advisor is the quality and structure of that original claim preparation and the standard of their communication with HMRC. A claim, when it goes in, shouldn't have red flags that HMRC is going to have to open an inquiry to ask about. And if an inquiry does happen, and some inquiries are selected randomly, it's important that your advisor is able to interact with HMRC on a professional and experienced footing. So when you're signing with a new advisor, think about whether inquiry support is automatically included in your contract, what their experience is, and how well their evidence is documented in the claim itself. It's also worth asking whether the provider adheres to professional conduct in relation to taxation principles, PCRT. For example, because we are ACCA regulated as a practice, we do uphold those standards and they impose a strict code of conduct. A good provider would also have a collaborative and commercial approach. The strongest R&D claims are created through an interactive process. It's not just transactional. Effective providers work collaboratively with the finance team at a company, with the technical team, leadership, stakeholders, to make sure that the claims reflect the commercial and technical realities. And that collaborative approach can really help create better alignment with any stakeholders' expectations of the claim and its process. It can make information gathering much more efficient. It can reduce the operational disruption or the time spent on the company's part in putting the claim together. It can make for stronger evidential integrity, and it can make for a more proportionate and commercially grounded claim in the end, which stacks up when HMRC come to look at it, and it makes sense. Slide 15, please. So, what businesses should look for in an R&D provider? Providers with hands-on technical experience are better placed to understand the real-world development life cycles and be able to distinguish between genuine R&D activity and business as usual. So lots of providers you may find have only a single person working on a claim who will usually not have that deep technological experience in industry. The better ones will have a dedicated financial specialist plus an experienced technologist working on the claim. An advisory team with both of those angles is able to bridge the domain between the technical report of the project activities and the costs that have gone into that. So they should be able to translate what is very sometimes complex system development into a narrative that explains why this is hitting the statutory criteria. And they should be able to translate engineering life cycles into a coherent cost model and be able to show how experimental uncertainty is reflected in that technical narrative. So a few things to think about there when you're looking for a provider. I'll just hand over to Michaela to run through our overall service offerings, and then we'll take any more questions.
Thanks, Suzanne. Obviously, it's incredibly detailed. R&D tax credits it can be a minefield. The main aim of today's session and the last one and the one that's to follow is to basically give you guidance that although these rules and regulations are in place and we act and honour them, You guys don't need to know all the detail we do, because we're looking, and any other R&D provider is looking to give you the support and guidance you need. So it's brilliantly advised, the technical detail you've given, Suzanne, but don't let that put you off or let that overwhelm you. We are your steady ship to guide you and to support. And there is such benefit from the creative industries to optimise this scheme. Alongside this scheme, there are other reliefs which we'll be talking about in the third session, which could be very sensible for you guys to pay attention to. From Ad Valorem's perspective, we cover off all manner of business as detailed on this slide. We'd love the opportunity to have a conversation and learn more about your business and how we can support you with your creative journey on getting more tax efficient. I think that's everything from us other than questions.
So we will share the recording, and within that has Michaela's contact details. So if you are unclear on anything, please do reach out to them, and I'm sure you're happy to demystify things for them.
Yeah, we'll
Brilliant.
take the pain away. If you're curious into it, let us do the thinking. You just need to tell us what you do, and that's the way we can build around it.
Great.
Lovely. Thank you for joining, guys. Appreciate your time.
Okay, thank you very much.
Thank you.